So welcome back in tutorial number 2, and today we will look into the various terminology that actually you need to understand this aspect that mutual fund is not a very complicated subject. It is a simple subject, but only difference between this and the other financial institution is that it has got some new terminology, new financial jargons that we need to understand. So today we will only give you an idea actually what all are you supposed to understand while understanding this entire concept of mutual fund. You understand this, that our purpose of learning is for preparing examination, no? And in examination, besides concept, lot of terminology will come where you need to give answers upon that. So therefore these terminology is that actually you should be know. In our classes we will explain you in detail about all this, but right now you should know the scope of learning. So before you enter into a class, you should know what are the scopes, what are the topics actually we will deal into in the subsequent programs. No, and I give you an idea about all the important terminology in this tutorial today. That is what you are exposed to. You can learn it by yourself also, and you can also get the help of me as well. Now look at this, how it all begins. No, the words like diversification, portfolio, asset allocation, financial planning. No, these four words, no, they will come right from the day one. Chapter 1 itself, it will have a lot of uses. No, even in going chapter number 11 and 12, no, there also these words comes quite frequently. In fact, in entire book, you will come across this word called portfolio, diversification. And you know, if you have seen that tutorial number 1, and then you will say what is diversification, then investing across different securities, diversification, creating a combination of securities is called portfolio, investing in different asset class like equity, debt, currency, commodity is your asset allocations. And while you meet your financial objective and to fulfill your financial objective, you have a lot of methods through which you make a lot of permutation combination in making good portfolio, good investments, good selection of stocks and schemes. No, that basically is fulfillment of your objective, and that is called financial planning. So in nutshell, in short, I could able to give a glimpse of this. It will go on and on in entire program. Then you have a one classification that you need to understand, and that area is basically the types of a scheme. Very important. You will have a lot of questions coming from this area, and you have a varieties of classification, sub classification under this. You have an open-ended, you have a closed-ended, and you have an interval kind of classification. It's an interval kind of schemes. Fine. So this is one classification that you need to understand, and the other one is equity and the debt and the hybrid. So one should be clear about, now if a question comes like that, how the interval fund behaves, and what are the closing days, number of closing days in the interval fund, minimum or maximum, something like that will be there. So we'll take up this slowly, but then you should know the scope of your learning: equity, debt, hybrid, open-ended, closed-ended, and interval schemes. No, that way it works. And then you go inside the other topics. No, there you will come about the structure of mutual fund. I think chapter number 3 and 4, somewhere here. And there you come to know about the structure of mutual fund. And there you come the new word like a sponsor, the trustee. AMC means asset management company. What normally we say nowadays, no, mutual fund. No, basically mutual fund is a complete structure. The AMC is where actually you walk into for getting your investments and services that actually you walk into. That is called AMC, asset management company. Fine. Then you have a depository where actually you keep your all the electronic shares. Individually also you keep when you open demat account, and of course mutual fund does use depository services for keeping all the shares that they have. Fine, that they have. So depository, and then you have a custodians, then you have a RNT, that is register and transfer agents, and then you have a distributors. No, so these are the new words you will come across. And then you proceed to the next chapter, and there it comes very important. No, we normally call it offer document segment, and there you come out all the legal document. No, and then you have a words like SID. SID stands for scheme information document, SID. Then SI, a statement of additional information. KIM, key information memorandum. MFI, association of mutual fund in India. Yeah, remember this, it is in India. Fine. SEBI, Security Exchange Board of India, and then they issue, and you will come across this something called word called due diligence, disclaimer certificate. Now these words you will come across. So these are the words, these are the legal parlance. No, these are the legal words that is supplemented in the our learning, and a lot of questions come from this segment also. While completing this area, you will come across some different value system that has been defined by MFI, and for the industry people and for the participant like distributor and all, and they are understood by word called Agni, ACE, ACE, KYD is of course for distributor. When they enroll themselves in mutual fund, they call it know your distributor. NAV you must have seen in the tutorial number 1. Net asset value. AUM is asset under management. And very important is market capitalization. We'll explain you in detail about large capitalization, mid capitalization company, and a small capitalization company. Fine. And then you have a value, and then you have a growth. So these are value stocks and growth stocks. No. So this way you will come across different schemes. You will come across different kind of a nomenclature that is attached to the understanding of different mutual fund terminology. Beyond that, if you go, then there is a topic called investor services. No, there will come about a lot of terminology that we come across while we deal with mutual funds, and there you come about regular investments, direct investments. Regular is that when you invest through distributors, and direct is when you invest directly to the mutual fund. Means you go to the AMC, and then you either take the help of AMC person directly, or you yourself is aware about, you have a skill, you have a knowledge, so you can do it directly also. And then you have a lot of expenses attached to this. Not lot of, in fact, to be precise, very less of expenses. Mutual fund is a very least risky, I should say. It is the least risky among all the financial instruments. So you have entry load, you have exit load. Of course, entry load is no more now that exists. But you should read it that there is no entry load nowadays. Long back it used to be there. Fine. So questions comes around these areas. So I have put it here: entry load, exit load, and you have expense ratios. Fine. So this will understand. Expense ratio has gone a big change recently, and that has been incorporated into the new book, the new syllabus. Fine. So we'll go with the new expense ratio that is proposed to you. Then dividend capital gain. TDS is of course you can say partially it is there, and when the mutual fund declares dividend, no, then dividend for more than 5,000 rupees will be attracting TDS of 10%, and dividend being paid to NRI, OIC, OCI persons, no, overseas corporate individual, overseas country, no, OCI, definition I will explain you later on. So their dividends are subject to TDS. So dividend, capital gain, TDS. Otherwise, mutual fund does not deduct TDS for ordinary resident individuals, but in these two cases they do deduct TDS. Then STT, no, these are the taxes applicable on the equity segment when they buy and sell. So these all areas will come into discussion. And then when you invest in the schemes of mutual fund, and there you come about different types of risk and different type of return measurement, and that is what is known through systematic risk, unsystematic risk, credit risk. We have a complete picture, complete learning on this in a different tutorial. So, and in different classes also. So credit risk, interest rate risk, yield spread, durations is a measurement, beta, standard deviation. These three are measurement of risk. Durations, beta, and standard deviation is a measurement of risk. Fine. And alpha is a measurement of return, you can say alpha. And then tracking error is of course is the indication of the kind of risk and the return that you can consider for an index fund, especially for index fund only. So alpha, tracking error. Yield to maturity is understood in respect of a debt instruments or debt schemes. No, so there will look into this debt schemes and debt instruments. So P, price to earning value, it's a valuation mechanism. Earning per share, what one share earns for its shareholder. No. And book value. So these are the terms that will come across. Technical terms, no, but very simple, and you have questions also coming from this area. So you should know these terminology in totality during the entire program. If you proceed ahead, the schemes will be conceptualized, classified like multi-cap, large cap. Cap means capitalized. Fine. So multi-cap, large cap, mid-cap, small capitalized, that is small cap companies. No, a small cap schemes. No, we create like this. And thereafter you have schemes like index fund, you have a ELSS, equity linked saving schemes. No, they give you benefit under section 80C. When you invest up to 1.5 lakh rupees, you have a tax benefit under section 80C. Then you have a ETF, exchange traded fund, then you have feeder fund, then you have a host fund. These are the concept. Fine. Thematic fund, sector fund. So the classification of schemes are like this, and that is very, very important. Similarly, you have a classification of schemes for the hybrid segment and for the debt segment, and you have a words like this: capital protection fund, monthly income plan, balance fund. That's in hybrid segment. Fine. And then the liquid fund, host of schemes are there in the debt segment: liquid fund, money market fund, short term to long term debt schemes, dynamic fund, fixed maturity plan. FMP is known by fixed maturity plan. And then gilt fund, then credit risk fund, arbitrage fund, and then the floating rate scheme. So these are different schemes that you will come across. See, if you understand the scheme segment, you will probably be able to address the entire mutual fund. For every investor, for every student, and for any professional who is engaged in the business of mutual fund should know these 8-9 sub classification, or say around, I think 20-25 words are there. That is to the utmost understanding, because if you understand this area, you understand mutual fund also. And in the last segment of our terminology, we have a different words like SIP, STP, SWP, very, very popular: systematic investment plan, systematic transfer plan, and systematic withdrawal plan. And besides, we have one-time investment methods, we have a dividend transfer plan. So this is the way through which you approach a mutual fund schemes: how to invest, how to continue investing, and how to withdraw money also. This way you can do. And while doing this, some interesting terminology like rupee cost averaging, value averaging, no, and words like accrual, amortization, mark to market. It may be looking little technical right now, but it's very simple when I explain you in the different classes, no. So that is what, these are the words that you need to understand. Besides, few words are there: top down approach. When you build up a portfolio, you are a fund manager. Fine. When you build up a portfolio, how do you approach market? From top to bottom, that's from economy to sector to a company, or from bottom to top, that's a company to sector to a economy. So this way we explain this. And then you have a active fund management and the passive fund management. Fine. So this way and these two are also basically a fund manager's ability. How do they work? How do they approach the schemes of mutual fund when they do the fund management on regular basis, daily basis? Fine. And for you also, when you invest in mutual fund, then you sometimes go by these words, or either way. And sometimes the schemes are designed by using these words like a strategic asset allocation, tactical asset allocation, and the two other words, which is of course very clear and very closer to the other two: fixed asset allocation and floating asset allocation. These two are very, very near to the strategic asset allocation and tactical asset allocation. So these are the four words we will explain in details. And in the last, fundamental analysis and technical analysis. So in total, you will say that I could able to explain you around 50 to 60, not explain you, only introduce to some 50-60 words. And I tell you, in entire understanding of our learning, no, these 50-60 words, and that is sufficient for anybody to stand up in the market and speak to anybody. And that is the beauty of mutual fund, that if you understand these concepts, if you understand these areas of learnings, no, then it becomes very, very simple for you to explain the concept of mutual fund to your audience. Fine. So watch these terms, try to learn these terms, and then we will explain slowly one by one about these terms. This completes almost your entire study. I say almost, not the entire one, of course, almost. You will know a lot about entire book after understanding these some 60-65 words. Okay, fine. Thank you.